There you go.
Hello, traders. Cousin Vinny coming to you from theclosingprint.com, December 18th, 2022. In this edition of your weekend video newsletter, we'll discuss the indices, stocks, bonds, and assets that you might be interested in trading or investing in going forward. As our signals begin to break down further for a second week, we have 11 bearish indicators, 7 neutral, and 2 bullish to start the week. S&P 500 support 3,800, 3,830, and 3,850, with resistance overhead at 3,900 and 4,000. Fair value continues to be bantered about. It's at 2883 based on 2022 earnings, which have started to move lower, along with fair value and zero gamma for the week. Hedges are on our mind. We'll probably add to those this week, and we'll discuss why in the next few charts. As of Friday's close, we can see that the S&P 500 is still at overvalued territory with fair value down at 2883, with S&P 500 earnings dropping into the latest quarter and into year end. We can only surmise there is a higher probability that the S&P 500 will close at lower values than they are presently, with RSI below 50 and price right at the 50-day moving average. We're watching for a continuation towards 618 Fibonacci's, and if the worst case scenario plays out, 3,500 over the next couple of weeks. We also talk about the spiders during the week, with the prospects to revisit the lows that we put in on October 13th, becoming more probable, which is leading us to hedge more aggressively in SPXU as the markets continue this downward trend. We're looking for SPXU to soften the blow, and will continue to add as weakness persists in the S&P 500, the Qs, and IWM, with all three closing below their 10 EMA on the weekly time frame, while the New York Stock Exchange, also below its 10 EMA, did show signs that it might bounce this week in addition to the other three indices. So there is a remote possibility we could see a bounce first this week, but with the S&P 500 earnings and overall S&P composite showing earnings are moving lower, we would expect a test of that 618 Fibonacci level if nothing changes going forward. Volume was extreme on Friday. MACD is below its signal line and dropping, and stochastic still has a ways to go to get back to oversold. While VIX has been at a relatively low value, near the lows that we saw in April and in August, we're looking for VIX to spike back towards 30 in the short term, and are using UVIX as our hedge of choice. Relatively inexpensive hedge. If you don't like using puts, this is one way to hedge your portfolio, which we're using presently, and we'll consider to add to this if we see VIX moving higher into Monday and Tuesday trading. We can also use bonds as hedges. We start to see those moving higher over the last couple of weeks. And with yields moving lower, of course, bonds are moving higher. With the 20-year Treasury bond making higher highs and higher lows, we yet to get back above the 200-day moving average. With our hedges in LQD, investment-grade corporate bonds are making higher highs and higher lows, consolidating along the 200-period moving average, moving higher over the last 6 weeks. And if your 401k doesn't offer those two, you can also look at PTTRX, the PIMCO Total Return Fund, or similar funds to park some of your cash, something we might do this week as well. for our kids and our retirement accounts. We're thinking about adding to PTTRX in addition to the funds that are listed in the hedges section of the opening monologue. We also noted that there was 2 bullish indicators this week out of 20. While that's not giving us any reason to think that the markets are going to bounce furiously, there is a possibility that we could see some weakness persist in the US dollar, which has been trending lower. That would be good for companies that sell products overseas like Microsoft, IBM, Apple, and Nvidia, for example. If the dollar continues to move lower, that exchange rate in dollars at a lower value will help those companies. And with the dollar moving lower, we also see commodities moving higher. Safety trade appears to be in bonds and in commodities like gold and silver. So look for these to continue making higher highs and higher lows as investors and participants seek the safety of precious metals into year end. Finally, out of 20 indicators, we did have the dollar moving lower and crude oil also moving lower, which is helping consumers while freeing up some additional cash for holiday spending. Taken together, stocks, bonds, and commodities, we are watching the markets for reasons to add to our hedges or to take our foot off the pedal a little bit if we do see a bounce this week. Bottom line, we're cautious going into this week yet again as we close lower for a third week with S&P 500 earnings continuing to soften. S&P 500 sectors also deteriorating again. Last week, becoming more crimson red and telling us to be very cautious going forward. The indices lower, with the international ETFs also showing more red and orange, with only Turkey and Southeast Asia showing any sort of strength. With all of the S&P 500 sectors below their 21-day moving average and many below their 50-day moving average, there's reasons to be cautious and to hedge with the assets that we've listed in the opening monologue, as we feel earnings could only get worse before they get better. You'll note in the opening monologue there are only 5 stocks on the S&P 500 that look set up. AEHR, Air Systems, with stochastics oversold, price at the 50-day moving average, is a possibility that this stock does bounce this week. Stochastics turning from oversold potentially. MACD still below its signal line, so that needs to turn as a function of price. But there is a possibility that RSI turns back up. Air Systems is something that we're watching this week for a bounce. It manufactures wafer test used to analyze memory and logistics for the semiconductor industry. Looking for Air Systems potentially to bounce this week. It has a 99 RS line with earnings increasing 29% in 2023 and 63% into 2024. The stock is under accumulation with a B rating, while a bit overvalued at a PE of 49. Look for Air Systems to follow through this week, especially if we get any kind of bounce in the semiconductor space. Shoal Technologies also looks like it might bounce this week. It's a relatively inexpensive name. It manufactures electrical components for the solar industry. Stochastics turning, MACD about to cross. There was a bit of selling Thursday and Friday as participants look to take profits where they have them and appear to be more cautious. For now, we're just watching some of the stocks. There's very few on the IBD 50 that look good this week. Another stock that looks like it might follow through from the IBD 50 this week is Titan International. It produces tires and accessories for the agriculture and farming industry group. That had a nice pop on Friday, well above average volume. Titan International with the bounce also looks like institutions continue to add to their portfolios. Air Systems, Charles Schwab, Titan, Vishay, Intertechnology, and a few others were added to the IBD 50 this week, with Charles Schwab's inciting interest in institutions. They continue to add to portfolios in the latest quarter as earnings continues to increase going into 2023. We also have a B- in accumulation distribution telling you that institutions have been adding. Relative strength line is at 85 and climbing. We're at the 50-day moving average, looking for a bounce in Charles Schwab. And for RSI to continue this trek higher, if it gets above 50 and we get back above the 21-day, watch volume. The relative strength scan for the week is where we see a lot of setups with AAR, Calmine Foods, along with Caterpillar and John Deere. We're watching DR Horton and the builders, which have been moving higher, showing relative strength. Very important. The markets have been moving lower, and the builders have yet to break down. We also see stocks like ELF and Ulta, with ELF holding on to its 21-day moving average at Doji on Friday. Still, relative strength. There was a little bit more selling. MACD is below its signal line. Stochastics turning. While Ulta moved below its 21-day moving average. Watch these two. They tend to run together. ConAgra is also holding on to its 21-day, but Stochastics is embedded at highs. Looking for Enterprise to turn, EFSC. Financial services at the 200-day moving average. Volume was above average. Stochastics is turning. And RSI is oversold, starting to turn higher. Watch EFSC in the financial services group for a potential bounce and follow through. Lancaster Colony had a nice run from June into the recent highs in November. It has faded a little bit. It's above the 50-day. Notice how the 50-day is trending while RSI turns. Volume increased on Friday, and Stochastics oversold and turning. This could lead to a follow-through. TBBK, Bancorp Bank, also near the 50-day moving average. Looked like it wants to bounce. That could be shorts covering. Watch this one. Stochastics turning. RSI turning from below 50. Maybe there's some strength here. Volume by price band support as now resistance. Look for a push back above 28.50 for potential trade there. Not really feeling it this week. There are still a few stocks that are showing relative strength, but it really feels like there's reason to be more cautious. Earnings for the S&P 500 are softening as well, and the S&P 500 could drop towards that October 13th low in the short term. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter. So I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast. I do sense that it's going to be a bit smaller than usual and more ideas for protecting our portfolios going into year end. With that in mind, take care. We'll see you in the morning. Ciao.